First 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. If you doubled the money supply, what should have happened to the dollar? Should have gone down in half, exactly. What should have happened to the price of Bitcoin? Should have doubled. That's exactly what happened.
Today we have the Chief Executive Officer of Morgan Creek Capital, Mark Yusko, giving us his latest prediction for Bitcoin and why the devaluing of fiat currency is having such a massive impact on the crypto market. As we near the last part of 2023, Yusko dismisses recent criticisms of Bitcoin and the lack of regulation we've seen, and says that BlackRock has a larger percentage of the market than people realize. He believes while criticisms have been attempted to impede the approval of a Bitcoin spot ETF, this is parallel to the control that JP Morgan has, and calls into question the timing of these regulatory decisions. Yusko says that BlackRock will become the first major institution to secure approval for a Bitcoin ETF. He underscores the significance of this so close to the Bitcoin halving, and believes that because of this perfect storm, the growth of Bitcoin will be parabolic. Yusko highlights that the upcoming halving will propel Bitcoin's value to well above $100,000, driven by the increasing number of participants and growing adoption in the crypto space. Let's get right into the latest interview with Mark Yusko, as he offers an intriguing insight into the current state of cryptocurrency, the halving dynamics with Bitcoin, and the role of major institutional players. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
I wore my Keep Calm, We'll Print More t-shirt for the macro panel. And yeah, macro matters, but it depends what we're talking about, Jack. So you asked the question about Bitcoin, does macro matter to Bitcoin? I'll just say that no, it doesn't, in the sense that one Bitcoin is one Bitcoin. It always will be forevermore. But we don't price Bitcoin in Bitcoin. We price Bitcoin in other things, other pieces of toilet paper. So if you happen to live in Turkey, there's never been a bear market in Bitcoin. Not ever, because the lira just went to... And if you live in Venezuela, there's never been a bear market in Bitcoin, because the bolivar went to double. And if you live in Argentina, now with talks of devaluation, again, Bitcoin just goes up. Now, Bitcoin goes up and down in the US partly because of this, right? So in the first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. Y'all know what a trillion is, right? Y'all math majors, I'm gonna shut the doors, make you sit here with us for 31,710 years, which I promise would be most unpleasant to listen to me for that long. And you gotta spend $1 every second. That's 1 trillion. So 10 trillion, we printed 10 trillion. You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars. Why? Because just like gold, anyone looked at gold since the pandemic? Gold should have doubled. Read Chris Wood, okay? Gold has been the perfect store of value for 5,000 years. It's a long time, but it's been flat, dead flat at $1,900. Why? Because it gets spoofed artificially manipulated by JP Morgan, and they get fined every year $1 billion. And they're like, yeah, well, we made 20. It's the cost of doing business. You keep finding us $1 billion and we'll make 20 and we'll be happy. And they'll keep the price flat. So they've artificially suppressed the price of Bitcoin over the past few months. Why? Well, because BlackRock wants to buy it really cheap. There was a great meme the other day. Please don't sell your Bitcoin to BlackRock. Please don't be that person. But that's what's happening. And everyone's like, oh, when's the ETF going to get approved? What's that going to do? It's going to get approved when JP Morgan and BlackRock decide it will be approved, just like GLD was held up for 2.5 years until JP Morgan could get short enough gold. So all of this goes to my last point, which is the title of the panel, does macro matter? I mean, she stole our thunder saying probably, yes, probably. But actually, in our world, no. Crypto, digital assets, whatever you want to call it, actually are uncorrelated with traditional assets for macro reasons. Stocks and bonds are highly correlated, along with currencies and commodities, because they derive their value from the same things. GDP growth, inflation, interest rates, and corporate profits. Those four things have nothing to do with Bitcoin, Ethereum, Solana, anything. Nothing. Those things are driven by millennial adoption, okay? The tech itself, the regulatory environment, and changes in monetary supply. So there's a little bit of linkage there.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. With a giant spotlight on Bitcoin ETFs, Yusko highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
Interest rates are rising not because of inflation. There's no inflation. Inflation is caused when there's excess demand and limited supply of a good or service. What we have is currency devaluation. When an empire ends, the reason it ends is because you consolidate the power at the top with your cronies, and you go on a spender, on a binger, and you spend a lot, and you don't have any money, so in the old days, you'd go out and conquer other nations, and you take their stuff to pay for it. We can't do that anymore. It's frowned upon. And so what do? You just issue debt, and you stuff it everywhere. We stuffed it in the banks. Like literally, the banks were required to buy treasuries. Well, that was not a problem as long as interest rates were low. In fact, it was free money. JP Morgan had 0 negative trading days for 3 years. 0. Anyone ever trade with 0 negative trading days? If you talk to me, DM me. We'll go in business together.
To be clear, what he means by 0 negative trading days is every single day for a year they made money trading.
Every day.
Are you 252 for 252 in your trading?
No
There's
one.
252
No
trading days in a year.
And so
JP Morgan is.
Yeah, JP Morgan.
Is it because they're good?
Yeah.
Or do they have some help there?
Well, no, it was a guaranteed trade, right? Because anyone here ever borrow at Fed funds? Nope. No one does, right? Who borrowed at Fed funds? The banks. So when Fed funds were 0, the banks would borrow at 0, and they would invest in treasuries at 2.5%, 3%. Riskless trade, levered up 11 times. Awesome. Why did they do that? Because the banking system was bankrupt after the global financial crisis, so you had to re-liquefy the banks. So you re-liquefy the banks by holding interest rates at emergency levels, even though there was no emergency. And then what happens? Well, then the bank's balance sheet gets fixed. Well, now they want to make some money. We can't make any money if interest rates are 0. So we're going to raise interest rates. So anyone's deposit rate go up from 0? It's funny how that works. So they're still paying you 0 on your deposits, and now they're lending, well, to anyone who will borrow, but there's no demand. But the few people that are borrowing that need to borrow are paying 6, 7, 8%. So NIMs have exploded, and bank profits are up. And banks, up until 2 weeks ago, were up 30+% this year. Now they've rolled over because people are kind of seeing what's happening, which is overall liquidity is actually contracting because best laid plans are you get everybody psyched about low interest rates and you get the economy back humming, you lie about the recession. There was a recession in 2022. Full stop. 0.9% year-over-year growth is a recession.
Despite acknowledging the challenges and delays we're seeing, Yusko remains bullish about the future of Bitcoin. He points out that while speculators initially drive price movements, gamblers entering the market disrupt the cycle by pushing prices beyond fair value, resulting in crashes. He projects significant optimism about historical trends that indicate a roughly 10x increase in value with each halving event, with the next one in March of 2024, is scheduled to propel Bitcoin to $100,000. As technology evolves and the demand for decentralized and inflation-resistant assets grows, Bitcoin is positioned to play a significant role in reshaping the way people invest and use money. Yusko also draws attention to how governments' monetary policies have led to the devaluation of fiat currencies over time, impacting the purchasing power of money. In contrast, Bitcoin's limited supply makes it an attractive alternative investment for those seeking to preserve their wealth. What do you think about the latest interview with Mark Yusko? And what are your thoughts on his newest prediction of Bitcoin heading into the halving event and its impact on crypto price movement? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.